If you look at a lot of commodity prices, not only are they down 30 to some of them 80% from their peaks, they're down on a year-over-year basis.
Hello guys, welcome back to Christian Finance for your regular financial content. And today we're going to be covering Cathie Wood's view on the markets. And actually, interestingly enough, her thinking that we're going to be entering deflation. Yes, you heard it right. Not inflation, increase of prices, but deflation, right? So it's going to be interesting to see what she has to say. And then, of course, afterwards, I'll give you my own personal perspective on what I believe will be happening in the markets in the short to mid to long term.
If you look at a lot of commodity prices, not only are they down 30 to some of them 80% from their peaks, they're down on a year-over-year basis.
I mean, yes, I do understand where she's coming from. We've had inflation so high at 9% for a while that eventually the year after the 9%, one year after, it will have to be some sort of decrease, right? Because I doubt we're going to have a year-over-year high inflation. That just isn't realistic, especially with the printing currently, at least in the short term, actually really slowing down, which is a good sign. However, inflation is still a problem, right? I mean, if we look at March all the way through September, the least that we had is 8.3, and obviously the highest was 9.1% of inflation year over year. And yes, you could say that the October one was 7.7%, which is true. So there was a good amount of decrease in the inflation in the US. But personally, I'm going to need to see the inflation decreasing month over month for a while before I start making claims that the next big problem we're going to see is going to be deflation, right? Currently, still the major problems of the economy on the macro level are the war, the pandemics, the surplus of supply in Walmart and Target, which is quite worrying when the cheap alternative stores have a surplus of supply in a downturn economic time. And of course, the interest rates increasing, which I think there might be one more hike, but I don't think we're going to go much past that, which is good, especially if the inflation keeps on decreasing. But yeah, we'll just have to wait and see how time plays a part in all this.
380, 75% inverted. That's telling us that the bond market is saying recession and or big surprises on the low side of inflation expectations.
Yeah, I mean, when you have on the bond market 75% inverted, it could very easily mean recession, right? So very easily not be deflation like she's saying here. But she actually changed her perspective on everything recently, because probably a month ago she was calling for a massive recession and now she's calling for a deflation. It just goes to show you that nobody really knows what's going on, and all we can be is well informed, just know what metrics means what in the grander scheme of the economic events. But yeah, personally, I wouldn't be worried about deflation in the short term at least. With that, guys, I just wanted to take a quick second, ask you to like the video if you're enjoying it. More importantly, subscribe to the channel. It just takes one click. I do spend a lot of time giving you guys these constant updates. Only thing asked in return, guys, just subscribe to the channel. And I did want to take a look at a quick tweet by Michael Burry, as he says, "This was coming because it has always been this way before. How anyone over age of 40 has not seen it coming is a riddle. The answer is being greed." Yes, guys, super important point. Typically, when the markets are down, people are really scared to buy and think it's going to keep going down. That's just psychology. And then when markets start to rally, everyone starts to buy somewhere near the top, at least the majority of people, as they keep on thinking the markets will keep going up. And that's typically when the whales sell or some catastrophic event happens on the economic scheme of things and everything starts to crash. And the regular people at the top just hold the bag and they lose out, right? That's just the way it's worked for many, many years, and it will continue to work this way, unfortunately. Right here we have a perfect example in BTC, Bitcoin. Obviously a year ago, it peaked out at 69,000, and now it's less than a quarter of the price at 16.5. And here everybody was buying, right? Majority of regular folks were buying. And now here, the same people that were buying here will no longer want to buy here, even though the price is at less than a quarter of what it was back then. But here, nobody wanted to sell, right? It's just interesting how it all works. Quick tip for you guys. If there's one thing that can really be learned by Warren Buffett, it's be greedy when others are fearful and be fearful when others are greedy. So last year when the markets were peaking, Warren was either selling or holding. And now this year, especially earlier, that the markets were really quite at the bottom, he was either holding or buying. Get in the state of mind that if you have done your research on a coin or a stock or an index fund and you know you want to get in eventually, as long as it's a high conviction play, you've done your research and you have money that you're not going to need for the next 5 years, when the markets are on the way down, that is when you need to be investing, right? And you have to come out with a DCA strategy, so dollar cost average strategy, near the top. So this way you can sell and actually gain some profits. Because it's completely pointless if you buy early, the stock or Bitcoin go all the way up, you don't do anything with it, and then it goes all the way back down, right? You haven't made anything. In most cases, most people have lost in that situation. Remember guys, super important, most millionaires and billionaires are made in times of recessions. And with that, the video is over. Let me know what other similar financial content you'd like me to do next. Subscribe to the channel, it just takes one click. And as always guys, stay diversified.